So this particular webinar would focus mainly on how to use technical analysis, how to analyze the trend, how to use the momentum in the markets for the maximum output, for the maximum usage in your trading strategies. Now these are the topics which we will be covering. First we will be understanding the need of the analysis. We will be starting how and what technical analysis, trend identification, and then we'll be seeing some practical charts of technical analysis in the markets. Now why analysis? There are many traders in the market today who come in the markets with an objective to earn huge in the markets, but very sadly 95% of those investors turn up into losses even in the first 6 months when they start trading. So the point is, who is at the fault? Is the market at the fault, or does the trader need to analyze his trades before putting the trades in the markets? I believe and I hope that most of you must have heard these words like stop loss, targets when you trade in the markets. Now, when you trade in the markets, it is very essential to know what your stop losses are and what your targets are. Technical analysis will help you to understand what your stop losses, what your targets are, till how much time you should be there in the markets, and all those questions. Now this is what technical analysis is. Basically, we are analyzing the momentum of the chart. We are tracking how the chart is doing the movement. We are plotting many indicators. You can see there is a moving average indicator there on the screen. There is an RSI indicator below. So this is how you use the technical analysis. As you can see on this particular page, this is a technical chart. Now this is the stock price chart. As you can see, this is the time period and this is the share price bar for the chart. Now every typical chart is divided into two sections, mainly the stock price panel and then the volume panel. In the stock price panel, the stock price is being plotted. In the volume panel, what all volumes were there on that particular day is being plotted. Now in technical analysis, volume plays very important role. Whenever we as technical analysts see that there is a breakout in the markets and that breakout is supported by the volume, it confirms our trend. So the volume plays as a trend confirmation for every particular breakout in the market. There are different chart time periods: intraday chart, daily chart, weekly, monthly and quarterly charts. In an intraday chart, the chart is plotted on an intraday basis. It could be on a tick by tick basis, it could be a minute by minute basis, it could be a 15-minute basis. A daily chart where one particular dot represent 1 day's trading position. Weekly chart, one graph represent 1 week's trading session, and so on. Now for the very short term traders, it is always advisable to see the intraday chart with 5-minute tick size. You can also see the daily chart for a double confirmation of those particular patterns. Now types of the chart, there are basically three types of charts. One is line chart. As you can see in the line chart, the line is being plotted on the closing points. These dots represent the closing points and this line is dotted along the closing points. So the line chart has a disadvantage that you can only see the closing point of that particular stock. This is the bar chart. Now in the bar chart, as you can see, this is the bar. This represents the open, the right tick represents the close. This is the highest point, this is the lowest point. This is how a bar is formed. If the color is green, which means the closing is above the open, and if the color is red, which means that the closing is below the open price. This is how an OHLC or bar chart would look like. As you can see, this is the bar chart. We have plotted the bar chart and the OHLC chart, wherein this is the high, this is the low, open and close. So high low are always same. Open is on the left and close is on the right side. If open is above the close price, it is a red, and if it is on the opposite ways, it is a green point. A candlestick chart, also known as Japanese candlestick chart. This is how a candlestick chart would look like. So candlestick chart is a square shape with a tick upside and the downside. It is almost similar to the bar chart. Now this is how a trend is formed. Now trend shows the momentum or the expectation of that particular share by the traders in the market. If a trend is forming higher peaks and lower troughs, it is a rising trend. A peak is the point which is the highest point of that particular trend. As you can see, this is the peak point, this is the trough point. Another peak, another trough. This is the peak and another trough would form. So a base is known as trough and a high is known as peak. As you can see, these are peaks and this is a trough. This is the rising trend of a share. Now it is very important to understand before trading or before doing the technical analysis that which is the prevailing trend in that particular market, whether it is the rising trend or a falling trend. A rising trend would always have a higher high, higher low formation. As you can see, this high is higher than this particular high. This particular high is higher than this high, and this low is higher than this particular low. So you can see this is a higher high, higher low formation pattern on the charts. So this is known as a rising trend. Now here, as you can see, this is a high and this is a lower high. This is a low and again this is a lower low formation. So this is a falling trend on the markets, a lower high, lower low formation. This is a stable trend. When the markets are not moving, we call it as a stable trend. It is moving in a very tight range. It is known as a stable trend or a sideways trend. This is a very volatile trend where the higher it makes higher high and higher low or maybe lower low formation in the making. This is a very important point. What is a support and what is a resistance in the markets? Now, first, before understanding what is a support, we must understand the exact meaning of a support. Now, typically, the definition of support is a price point where the trader gets or where the share gets a support and the falling of that particular share stops. That is known as a support. The support is always formed by joining two or more troughs. As you can see, this is the support. This is DLF and it found the support at 255. So this is a support formation. Now this is a resistance formation. Unitech share, the share got resisted on two different points. This is a resistance formation formed by joining two peaks. Now this is trend line. A trend line is formed by joining the peaks or the troughs of the share. Here what we have done is we have joined the resistance points or the peak points of that particular share, and we have made a trend line. Now this trend line is a buy signal trend line because when the share breaks above the trend line, it gives a buy signal. As you can see here, the share breaks above the trend line. These were the resistance points where we have used to draw a trend line. When the share broke above the trend line, it gave a buy signal on the charts. So trend line is a very simple but very effective technique to understand and analyze the trend of the share. So trend line breakout or break below will give you that particular indication. Now this is a sell signal generation of the trend line. As you can see, we have made this particular trend line by joining the supports, and here where the support broke out, it gave a sell signal. Now the trend lines could be used for a short-term trader, medium-term, or a very long-term trader. Now let us understand some patterns in the market. Now this is double top formation. Double top formation is a formation where there are two tops at the same level. This is the neckline from where the breakout or breakdown happens. Let us see it practically. Now this is a chart, Bajaj Hindustan chart, where we have seen the stock has formed a double top formation, exact double top formation. It's somewhere at 243 levels. This was one top, this is the second top at 243 level. Now here we have seen that the share has formed a double top formation and the stock has retraced from that particular level, the double top formation, and it has broken the neckline formation. Now it has broken the neckline at 187. So the distance between 243 and 187 is somewhere around 56 points. So the target from 187 would be 131. So this is how you can analyze if the share is breaking a double top formation. It could be a commodity, it could be a share, it could be a future contract. So if it is breaking a double top formation, now this could be in intraday, it could be in monthly chart, it could be in a daily chart, it could be anywhere. All the charts which we will be discussing, which I will be showing you today, is applicable for equity, commodity, or any other trading, maybe currency. Useful for intraday, daily, weekly, and any other kind of charts. So here you can see this is the formation, and you can clearly calculate the target of your trend. This is a double bottom formation, just opposite of the double top formation. Here two bottoms, simultaneous bottoms, two or more simultaneous bottoms are formed. Now in this double bottom formation, what happens is that the share is seeing two different bottoms at one particular price point. There are two bottoms formed somewhere at around 117 level on the share. The stock broke the neckline at somewhere at 160 price point, and it gained at least 44 points. Although you can see when the share broke this particular price point, above this price, the share has moved all the way from 160 to somewhere around 420 levels. So you have seen a jump of almost 300 points on the share. So this is how effective a double bottom formation is. But technical analysis would only promise you this 44 points. Anything above is a bonus for you. So you can always keep your keep your stop loss trailing and trade in this particular counter. This is how you can trade. This is the head and shoulder formation. The left pattern is known as shoulder, left shoulder, head, right shoulder. This is the neckline. If the stock breaks below the neckline, it gives a sell signal. Here you can practically see the head and shoulder breakdown. DLF share. This was the left shoulder, this was the head, this was the right shoulder, and this is the neckline formation. Now the distance between the neckline and the head is somewhere around 57 points, and that was our target. As you can see, this is almost 57 points. So how the target is calculated? From the breakdown, you draw a line, it will be 57 points. So this will be your entry point and this will be your target. Although the minimum target was 57 points, but it fell down almost 200 points from here. So you can see how effective these head and shoulder patterns are. So these are very, very effective patterns. You can also see some of these patterns on our website also. We have a blog, technical analysis blog. There are many different patterns which are formed. This is an inverted head and shoulder pattern. Left shoulder, head, right shoulder, and this is the neckline break above. This is how it works. So we have seen the distance between the high and the neck was around 212 points. This was the distance, 212 points. This was the neckline breakout. It covered at least 212 points. Although the target was, the share gave too much in the making, but this is how an inverted head and shoulder works. What happens sometimes, we encounter many queries about head and shoulder, that where to make a neckline, because neckline is the most important point. Neckline will decide your entry exit point. So it is very important to make a neckline where all the bottoms of the shoulder and head are formed. So this is how you make a neckline. As you can see, this is the neckline. Now another indicator, MACD, moving average convergence and divergence indicator. Now this is the indicator area. This is the indicator area. As you can see, there are two different lines in this particular indicator. This is the first line, which is the highlighted main line, and this is the dotted line. This line is the 21 minus 12 days moving average, and this is the 9-day moving average of this particular line. So whenever the dotted line moves, the main line moves above the dotted line, it gives a buy signal. As you can see here, it is a buy. Here it was a positive crossover, this was a negative crossover, and it gave a sell signal. Again negative crossover, it gave a sell signal. Again positive crossover, and gave a buy signal, and the share gained from here. So this is how you can understand and analyze an MACD indicator, that if the indicator is giving a positive or a negative crossover break line. Zero line is a double confirmation. So if the moving average is above zero, it estimates that the medium term trend of the share has gone into the positive territory. Now the moving average. Moving average is simply the average of that particular stock which is moving, which means which is calculated every day. This particular average is calculated every day. A break above the moving average will give you a buy sign. A break below the moving average will give you a sell sign. It's a very simple technique. The moving average can be used in intraday also, it could be used in delivery also. This is RSI, relative strength index signal. RSI is a very highly recommended and a leading indicator in the stock markets. RSI moves from 0 to 100. It is a percentage indicator. So any breakdown below 0 gives a sell signal. Any breakup above 30 will give you a buy signal. So as you can see, the RSI has broken above 30 line and it gave a buy signal. The share rose from here to here. Again it gave a sell signal and the share sold. It fell from here to here. So you can see how effective this RSI indicator is. So this was a short presentation on technical analysis. On the application side, we would always suggest you to use a combination of indicator. It could be a moving average and an RSI, or a moving average and a trend line. So this will give you a double confirmation. So now if you have any further queries, feel free to ask us all the queries. So now we have started receiving the queries. The first query is that what is a momentum? Momentum is basically the force of movement. Let's say if the stock broke out from a head and shoulder and the momentum was so high that it gained 10% in 5 minutes. So we'll say it is a highly momentum stock. What is meant by parabolic SAR? Although parabolic SAR was not covered here, parabolic SAR states parabolic stop and reversal indicator. So it's a kind of a dotted moving average line. So if the stock chart moves above the parabolic SAR acts as a stop loss and the share will give a buy signal. From where we'll get these charts? You can get these charts on the internet also, or you can mail us at info@epiclearning.in. We'll be sharing our email ID at the end. You have also received an email ID along with the webinar invitation, so you can mail at that ID also. You can send us the mail and we'll help you in getting the chart. Okay, another question, how RSI is a leading indicator? Now, a leading indicator is an indicator which indicates the momentum of the share. So when the momentum of the share turns positive, the RSI turns positive. So RSI only measures the momentum. It does not measure the price breakout or breakdown. So it is a leading indicator. How can we get this study material? You can mail us at info@epiclearning.in. Let me put a mail to you. We have just sent our mail ID to everybody, so you can mail us all your queries. If you need any study material, you can also get the study material from there. Okay, so the next question is, what is the parameter for setting moving average and RSI also? Very fantastic question. Now, it depends on if you are a short-term trader, if you are a long-term trader. So if you are a very short-term trader, you should always use 5-day or a 5-minute moving average along with 14-day RSI. So this is the indicator for the short term. If you are a medium-term trader, you should use a 14-day moving average and an RSI. Okay, if RSI moves above 80, then we'll go for sell. No, we only go for sell if it reverses below 70 or 80. Now, some analysts use 80 as a selling indicator. Those are very aggressive or very short-term indicator analysts. You should only sell a share if it breaks below the RSI indicator. If it is moving above the RSI, it is always in the positive sense. What are whipsaws? Whipsaws are a envelope indicators, although that is a very advanced things. So these are enveloped indicator on the stocks. So which is the most reliable indicator? The most reliable and easy indicator, although every indicator is good in its own sense, but very easily used indicator is trend line, moving average and RSI. A combination would be great. How does one do technical analysis? There are many sites available, stockcharts.com, and there are many different sites. You can go to those sites and you can learn the technical analysis and start. How do you find support resistance in any script? Now you can use moving averages to find the support resistance in the script. What charting software is good? Although there are many different softwares which you use, so Falcon, Iris for intraday, and maybe Metastock for the end of day. Okay, is technical analysis more powerful or fundamental analysis more? Both the studies are okay on their part. It depends on you. You want to do a momentum trading, go for technical. You want to do a long-term investing, go for fundamental. But there is a new technique which is there in the market, which is known techno-fundamental analysis, where the smart analysts are combining technical and fundamental analysis both together and using their techniques. Which moving average should we use? You should use 5, 7, 14, 35, 50, 100, 150 day moving average for analysis. How moving averages or how indicators work in sideways market? Sideways market, the indicator would fail because the indicator indicates the momentum, and if there is no momentum, the markets would fail. Always advisable to avoid the sideways market. What is the difference between stocks and commodity technical analysis? Now, although the difference is not much, but it depends on the style, personal style of an analyst. Frankly speaking, on the theoretical side or on the book side, the difference is not much if you use it in commodity or equity or currency. But in commodities, the leading indicators work fantastically as compared to the equities. This is my personal view, although it is not inscribed by any book out there. Okay, another great question, that should be double top hitting exactly at the same point or plus minus 5-10 points? Yes, practically you cannot find a copybook double top pattern. So a 5-10 point here and there, or maybe 1.5 or 1% or 0.5% here and there would do. What is the best value of MACD? 1221 is the best value. Okay, please provide us the next workshop detail. Although we have not finalized the next workshop detail, but it will be most probably in the end of the or maybe last Saturday of the November, but we have not finalized, but we will be definitely mailing you all those details. So how we relate price and volume with charts? So if the price is rising and the volume is also rising in the charts, you simply understand that the momentum is positive. But if there is a positive breakout in the chart and the volume is also rising, it is a double confirmation. Okay, what is the term short? Short is used when you sell and long is used when you buy. If RSI comes below 30, what we have to do? If RSI is below 30, ideally you should wait when the RSI turns above 30. That is the buying time. Okay, a very good and a very practical question. When you trade in intraday, in 5 minutes the RSI falls below 70 and in 15 minutes it goes above 17. Now there is a thing known as MARSI, which is the moving average of RSI. Normally some advanced software has this indicator. What you can do is, firstly, if the RSI is too volatile in the intraday market, you should always plot a maybe 15 minute or a 30-minute RSI in the intraday market. This will give you an exact location. Secondly, you can use the moving average of an RSI, so that will act as a double confirmation. Any site for technical analysis is stockcharts.com. That's a US site and a good site to use. How to identify false breakouts? False breakout cannot be identified, because if we identify a false breakout, it will not be a breakout. So it is only after a breakout happens, the false breakout is there. It is also known as a trader's remorse. So practically there is nothing called as identifying false breakout, because if it is not, it is false, it is not a breakout, and vice versa. What is the best moving average for intraday trading? Intraday trading, you should, if you are using a minute chart, use a 7 and a 14-day moving average and a combination of moving average crossover. To get some study material, you can mail us and we'll get you some study material. Can you suggest some good books on technical analysis? I mean, instead of going for books, you should go to the website. Stockcharts.com has a very good content. What is your target for Nifty in coming days? Although this was just a training webinar, so we'll like not to disclose our targets in this particular webinar. Sorry for that. Can we get a workshop on working with Odin? Okay, so this is a query. They want a workshop on Odin software. So you can mail us at info@epiclearning and we can arrange a separate workshop for the broking companies or sub-brokers for the Odin software. We also have a corporate workshop. So if there is anybody out there who is a sub-broker or who owns a stock broking company, they want us to train for the sub-brokers, investors, employees, they can mail us and we'll be more than happy to conduct a webinar. We also conduct a regular webinar for investors and traders. So the stockbroking companies can also approach us, sub-brokers can approach us for a special webinar for their clients. Simply have to go to epiclearning.in. You have our numbers there. You can mail us at info@epiclearning.in. For jobbing purpose, can we use RSI? Yes, you can use, but jobbing mainly you should use stochastic oscillator. Intraday trading, you should follow a 5-minute chart. Commodity chart service, iCharts.in is a good commodity chart service. You can go to Metastock also. Okay, what Nifty is making. Okay, so let me share something about the current chart of Nifty. Currently, Nifty made an inverted head and shoulder pattern, so which was a breakout at somewhere around 6250. But what we have seen lately, that on a daily chart, the inverted head and shoulder formation is back again below the neckline formation. So that is the recent formation which you can see. Any good Indian website from stock charts? I mean, you can go to epiclearning.in. We have a very good material on technical analysis. We have a blog there. So you can go to epiclearning.in for technical analysis side. We have just sent you our website, epiclearning.in. We have a blog which is there on the front page, the home page of the site. We have a blog for technical analysis. So you all can visit anytime. It is updated always. Which is the better way of trading, intraday or positional? The best way of trading is where you put your stop losses. Is it for mutual funds, only for traders? No, currently it is only for traders, not for mutual funds, because mutual fund is not highly traded in the markets. Okay, so we have another question. I guess it could be relating to most of you. Some guys are having some audio issues because of the lower bandwidth. You will be getting to see the video of this particular webinar most probably on Monday. You can go to epiclearning.in and you can go to video section or a media center section and you will be seeing the video of this particular webinar. So we'll be providing the video link also of this particular webinar on the website. What should be the risk reward ratio? Ideally it should be 1:3, which is 1 rupees risk and 3 rupees reward. Where should this stop loss be placed when there is a breakout? Very fantastic, very practical question. So let's say a breakout is there using a moving average. So the point where the share broke above the moving average, half or 1% above that point should be the ideal stop loss. Can you explain Bollinger Bands if the time permits? We would be very sorry that we would not be able to explain the Bollinger Bands. Maybe in the next webinar we can explain the Bollinger Bands. So if you have any further queries, you can put up on the chat. How to do swing trading? Swing trading is although not a very easy task for a trader to do, but a very simple way of doing a swing trading is via using a trend line. That's a very simple and, as we call in Hindi, a desi tarika for doing swing trading. What you can do is you can plot different trend lines on the share. There is a thing which is known as trend channel, which is formed by drawing a resistance and a support line. So that helps your swing trading. How to use trailing stop loss? Now trailing stop loss can be used via moving average pattern. So let me show a chart to you to explain how to use a trailing stop loss. Now as you can see, there was a buy signal generated here and you put a buy. Now this moving average line will act as your trailing stop loss. So wherever your moving average moves, it will be your trailing stop loss. Here your stop loss got hit and you sold the position. Elliott wave theory they want in short, although it cannot be explained without showing you that on the screen. That has a wave 1, 2, 3, 4, 5 ABC wave, reversal pattern wave. So how do we arbitrage in NSE BSE scripts? Although nowadays the arbitrage has shrunk very much, so there are not many opportunities to do an arbitrage in the markets, and I would advise for a retail trader to stay away from the arbitrage. Okay, what is fast stochastic and slow stochastic? Slow stochastic is more for a laggard indicator and fast stochastic is more for a leading indicator. How many days stop loss you should use for a trailing stop loss? Normally you should use a 7-day moving average for a trailing stop loss. For a swing trade, should you use 30-minute chart? Yes, you should use a 30-minute or a 45-minute chart. Okay, so using RSI where you should put your stop loss. Now when you are using RSI, you should also use a moving average which will help you take out your stop losses. How important is ADX, average directional index? It is also an indicator related to MACD, somewhat related to MACD. How to prevent whip slashes while using trailing stop loss? Now when you are using a trailing stop loss, there are some points where your stop loss gets triggered and the share is again back to the same point. Although there is no foolproof way to avoid whiplashes, but what you can use is you can use a double moving average or double stop loss, double trailing stop loss, where you can use a 14 and 35-day moving average stop loss. From where you can get the details of the stock in news. There are many websites, moneycontrol.com, nsindia.com. You can get the news on the stocks. What are indicators for choppy market? For choppy markets, you should use Bollinger Bands. And if the market is very volatile, you should go in for some option strategies, wherein you can you can do a short strangle or a short straddle in those markets. Whether you should put stop loss virtually or actually, although books say and the traders say that you should always put your stop loss actually. Okay. Trading in future or safe or option is safe? Option is more safe. Yes, MetaStock can be used to develop a systematic trading strategies. There are many uh, pre-made trading indicators there in the MetaStock. ADX, I mean, currently we are not able to explain ADX, so maybe in the next session. Money flow index or MFI is mainly, it explains the role of the volume of in that particular counter. In trading hours, which site we can use instantly for technical charts. NSE also provides real-time charts, so that you can use. Although there are many brokers which provide technical analysis inside their online trading softwares. In the next session. So in the gaps you can do, I mean, there is no way to prevent the gaps in the markets. There are always gap up, gap down opening. I mean, if you want to learn analysis, we can help you out. You can just mail to us and we'll be helping you out in learning the technical analysis. What is the best indicator for trending, ADX moving up or ADX moving down? Now ADX, when it moves above the 20 mark, it shows that there is a movement in the market. Do you have a session on using Metastock? Although we don't have a session on using Metastock, but maybe we can arrange a session for anybody who likes to learn Metastock. You can put in a mail to us, or you can call at the number which we have mentioned to you all. You can arrange a session for using Metastock. So with this, we are almost at the end of the webinar. If you have any queries, you can mail us to at info@epiclearning.in. So with this, we'll like to end the webinar, although there could be some questions which could pop out after the webinar. You can mail us at info@epiclearning.in. We'll be more than happy to answer those queries. So thanks again, everybody, for coming to this webinar, and we hope that we have made some difference in your trading strategies, and happy trading. Trade with stop losses and make money in the markets. Thanks, Epic Learning.